The broadcast is now starting. All attendees are in listen-only mode.
Good evening, ladies and gentlemen, and thank you for being with me this evening. My name is John Needham. I will be your host for this webinar, and how delighted to see so many of you with us here today. All our usual friends, of course. Glad to have you. Carol, wonderful to have you with us. Chase, of course. Gabe, well, Gabe, it's wonderful to have you, Gabe. I'll be talking to you on Monday and looking forward to that. Gabe has been doing his Danielcode Masterclass tutorial for quite a while now, and Gabe has some personal difficulties getting the time to give attention to the trading, but he perseveres and he's doing a wonderful job. And we'll get there, won't we, mate? So there we are. Would somebody please just type in the question box that the audio is all right, that you can hear me okay? Hugh's with us, wonderful to have you. Peter, yes, Peter's. The other Peter, Isaac's with us, that's good. Nice to have you with us. And let's see who else is here. Goodness me, Jerry Winter is with us. Jerry, how wonderful to have you with us today. What a treat. I hope you're well. I hope the family's well, my friend. Can you hear me all right, Jerry? Nobody's typed into the question box yet. Justin, perhaps you will. Can you hear me? How's the volume? Yes, here it is. Good. Mark, of course. Mark L, no party without Mark. He's missed the last webinar, the first one ever, I think, and glad to have you back with us, Mark. That's grand. Thank you. And you, good. Wonderful. Thank you. Okay, let's keep going. Good to have Justin in particular with us. Justin's done so much work for everybody. He's absolutely marvellous. Mark, of course, is with us. Milton's with us. Good to have you with us, Milton. Rolf down in Melbourne's with us. Toddy over in Southern California is with us. Michael's with us. Jerry, another Jerry. That's grand. Okay. All right. Well, here is this wonderful graphic that Terry's done for us today, joining the Danielcode Success Party. And looking at these figures, I used to have that shape once, but it was some years ago. Terry, I'm sure he's probably the star performer in this little picture you can see. So let's get on with it. And here we are. Okay, so as you know, folks, markets are rational, orderly, and sometimes predictable. And that is the wonderful part of Danielcode. Now, we're going to, in the process today, talk about creating and trading Danielcode time signals. The best trading system I know or have ever heard of, and it is available at the Danielcode tutorial, which we call Masterclass, and it's now available in our new Teach Yourself to Trade video series. So I'll show you that as we move along. And just want to run through quickly for newcomers of a little bit of an idea of what we offer. So you can see these golden boxes here. They start off with our TO3 signals. Now, TO3 signals are reversal signals, and I'll come to that in a minute. The TO3 plus signals are reversal signals and some trend continuation signals. Our success signals are basically a daily machine analysis of the market. FlipMe is a program that I've been talking to you about for a while. I now put those charts up there for you to see under that tab. And also Tradecraft, which is the 6-day charts, which is very important. So once you've gone to your TO3 or TO3 plus, whatever you're interested in, you should then go to our Danielcode Trade Program link. This is on the Danielcode website, and that will tell you exactly what markets have signals for today. And this tool has the ability to carry forward the signals. Some of our time signals or trade signals are valid for the day they're posted. Others are valid for 2 days, including the day of posting. And our blue line signals are valid for 3 days, including the day of posting. And this program remembers what they are and will carry it forward. And you can simply type in there the number of contracts you're interested in for any market. And there's a button underneath saying calculate, and it will tell you exactly what your total risk value is and this tells you things like exactly where your entry is, exactly where your initial stop goes, whether this is a reversal or a continuation trade, whether it's a correlated trade, very important. I had a young gentleman recently in Britain who was complaining to me about his Forex trading, but he was trading 3 pairs of US dollar pairs. So essentially you're trading the same market. Markets will tend to go the same way due to the high level of correlation in them. So as I say, all of our signals basically are reversal signals. I've always been obsessed with turns, and this whole journey I've been on for well over 30 years now to discover what makes markets turn is based on turns. And that's a bit unusual. Most people who give trading advice will stress that you won't do very well if you keep taking trades against the apparent trend. Well, that's true, but the big dollars are made on the turns, which is why I'm so obsessed with them. As you can see, this little chart here is wheat. As you can see, we got that turn to the day. Up it's gone, one little tricky counter trend, then back on the outside bar, and it's continued upwards. So one of the simplest ways of determining trend, back in the day, Jerry might remember, back in the day before all things internet, we had trading books. This was a little bit before my time, so maybe Jerry won't remember, but we had these chart books with basically what they were pages and pages and pages of charts and describing and illustrating how to use various studies, MRIs, stochastics, ADX, anything you can think of. And I can remember a particular version that came out that particular month. Its big write-up was zero balance, and I've been a bit obsessed with zero balance since then. Zero balance traditionally refers to time or price being in balance. And what I've been exploring for the last few years is zero balance in momentum. And it has the uncanny ability of showing us the probable trading patterns of what I call the corporates, and perhaps I shouldn't have called them then. I've been really thinking of institutional trading, and once you see the ability of these tools I've created to identify the trading patterns of the really big players, it's quite eye-opening. And very worthwhile knowledge, and that's what one of the things that the new program Beyond Danielcode, that's one of the things it does, and I'll show you one of those charts a little later on. So this is the British pound currency futures contract. Those of you who've been trading a long time will remember the PFG debacle, and that was a business called Peregrine Financial Group. They were very popular with traders, very popular in particular with Glenn Larson, the owner of Trade Navigator. A lot of Trade Navigator clients were using PFG as their broker, and they went belly up. And the takeout from it is that when eventually all the various litigation got to court, the United States Bankruptcy Court held that Forex was not a security within the meaning of the US Securities Act, which meant basically that if you had a futures account with PFG, eventually you got most of your money back after the litigation had gone through, and et cetera, et cetera. If you had a Forex account, you got nothing. You were just a general creditor. And that caused a wave of anxiety in the United States in particular. And the various regulators said, well, this is a big problem. We better regulate Forex, and they did. And it was fairly onerous what they came up with. So essentially, almost all the big Forex brokers in the States tried it for a little while and said, look, this is not worth our doing. I know that Gain Capital, one of the biggest Forex platforms back in its day, it sold its whole Forex division to an Australian company for $1 plus a little bit of debt assumption. So what happened then is that a lot of our clients switched over to currency trading, currency futures. And this is a currency futures contract. And it looks pretty much exactly the same as a Forex contract. But the point I wanted to make to you was that you can trade currency futures from our Forex signals. The Forex signals can be executed in currency if you like. I've been meaning for a while to think about whether we should switch over from Forex to currency futures. A lot of people have, but we have some dedicated Forex traders, so we haven't yet made that move. But if you're interested in trading currencies, you can see they're very good markets. They do, when they're trending, they do trend, and they trend particularly well. And there's been some wonderful things happening in the currency and Forex markets lately, with all the drama around the Japanese yen and the weakness in the US dollar. So if you're interested in currency futures, don't be put off. Just take the Forex signals, execute them in currencies. You'll see they work exactly the same way. What we're starting with is this idea of the simplest of trades, reversal trades or continuation trades. As I said, I'm focused on reversal trades because they're so good. And what you can see is the market behavior as it's striving to find target recognition. This idea of target recognition basically are these red, black, and blue lines you see on the members' charts, which are available at the website. They're updated twice a week, more often if necessary. And you can actually see markets working to try and find target recognition. You can see here we had that one big day down on Monday, and it was at a level that's no longer on the chart, but it was exactly at the level. Look at Tuesday. It just pokes down, it stops exactly at the red line. What about Wednesday? Well, it goes down a bit further. It doesn't quite get to its next blue line or red line, but it reverses, and look where it closes, almost exactly on the red line. That's the sort of market behavior that tells you the markets are searching for a number. They're searching for that satisfaction in themselves that they found true target recognition. And that's what this top in the S&P has been about. It's had 1, 2, 3, 4, 5 goes at that same area around the 56, 70 blue line. And eventually, when it had satisfied itself, it turned over and down it went, which was pretty nice. This is gold. This is another one of our TO3 signals. You can see how it's that absolute target recognition that sets up the reversal signal. In this case, this fellow here, which is COMEX Gold, the low of that setup bar, which was on Tuesday, get the new glasses on, yes, Tuesday, that low on the day was 2504.4. Now, I'm not making it up. That red line's been on there ever since the high, so it's been on there for weeks. 2504.4 is exactly where the market went to. The market knows these Danielcode numbers, and it's tracking them, and it actually talks to you. I've told you about this before. The market is actually saying to you periodically, I know these numbers and I'm tracking them. And if you don't get that feedback within 3 days, the market is saying to you, not this ratio, try a different ratio. But this is typically what happens with markets. They're searching for these Danielcode ratios. When they find them, they are ready for a turn, and that's great. That's exactly what we trade for. So nice little TO3 buy signal, nice little trade up in gold today. Here is copper. Same thing. You can see its TO3 buy signal was 2 days ago. This target recognition is valid for 2, sometimes 3 days. But that's the bar that's set up your target recognition and set up your TO3 buy signal. The low of that bar also on Tuesday was 405.60. Have a look. You think I'm making this up? Look at that red line sitting there. It's been on there since the high. It's created from the high to the low. Standard Danielcode ratio, 405.60. That's a 74% retracement. What was the low on Tuesday? 405.60. Does it do that often? All the time. All the time. It'll give you that target recognition, which is valid either at the bar, high, low, or the close. You can see in the Russell yesterday's low there, it was exactly 2135.7. What's our red line? 2135.2. And what we require is that the market finds these numbers either at its bar, high, low, or on the close within 0.1%. Not 1%, 1/10 of 1%. And you'll see this happening all the time. And it's not easy for markets to do. But when it does it, it's telling us something. So the more you know about target recognition, the better trader you'll be. This is soybeans. We've had a couple of decent trades out of this with a run-up, and it created a sell signal back on Tuesday as well. That high bar into the blue line, the high of that was 1024.4. What's the blue line? 1024.66. Two ticks variance. In fact, that's only one tick variance because soybeans are grain, it moves in quarters. So that's a one tick variance. How often does this happen? All the time. And that's what you should be looking for. That's the vital thing. This is silver, and this is a pretty clever adaptation of target recognition. You've heard me say target recognition is valid at the bar, high, low, or on the close. Well, on Tuesday, silver's close was 2834.5. Where's the blue line? 2834.5. That number has been on the chart since 2 days after, since the last high, the big important high, up at the 3067 number. So you can see that market is doing exactly what I say markets do. And I've been doing this for years and years and years. There's nothing new about this. This is typical market behavior. And what we can say with a very high degree of probability is markets do not turn without target recognition. And that's in the high 90%. Markets basically have to have target recognition before they'll turn. And this is the sort of behavior you see on silver. There was your perfect target recognition at the close. Little inside bar as it washed off some momentum. Then the buyers elected. Up it goes. And the chart it was sitting on, the high for today, was 29.55. Where's the red line there? 29.56. Close enough for government business, as they say. So that's the sort of basis of the TO3 and TO3 plus signals, and that's very, very basic trading. And the simplest form of trading is simply to exit first profitable close or first profitable opening. They're pretty much similar most of the time. And the reason why that's such a popular method of trading is that you can see the turn, you can see the setup for the turn, particularly if you're doing Danielcode. You'll see it perfectly to within a handful of ticks. But what happens after the turn? Well, if you haven't exited first profitable close or first profitable opening, then you've got to make a decision, and you've got to make a decision about what is the apparent trend. And there are a number of ways of doing that. I will teach you 3 different ways of determining trend. One is much faster. The other 2 are pretty solid, and they're the sort of trend change signals you'll see all the time. So I think finally I've got here for you wheat, simply to show you this same target recognition. You had a TO3 and blue line buy signal right at the low, 521 correct 4, and up it goes, and that's been a nice trade with one little jiggle in the middle. but it all starts from target recognition. That's the most important thing. If you do nothing else with your trading except introduce target recognition as the final filter for your trades, your trading will improve immeasurably, and that's a fact. Here's UST bonds, another TO3 buy signal, $2,500 in that trade now. Pretty interesting, nice little trade. Okay, and of course, don't forget the moon. I have periodically over the years spoken to you and shown you how markets react to the various moon cycles. S&P and silver in particular, very much dominated by lunar cycles. You can see on this chart the capital A stands for the apogee, and important marks in the moon's rotation around the Earth, apogees and perigees. An apogee is when it's moving out in its orbital pattern. It's not a circle, it's a elongated, an orbit stretched very much on one side, I should say. And when it goes out as far away as it's ever going to get on that cycle, that's called the apogee. The opposite is the perigee, which is when in its rotation around the Earth, the moon is at the closest place, closest point it gets to the Earth. And of course, we have supermoons and all sorts of things as well. But just a quick look at this tells you, look at the number of turns and reactions that you've had from the full moon, the new moon, the apogee and the perigee. And there's other cycles as well. But pretty dominant, this stuff. It's just been running off the apogee up to apogee, up to the full moon, up to the new moon. And that's exactly what happened on Monday to the S&P. Okay, so once we get past those, we have our success signals. These are daily signals for particular selected markets. And if you're interested in any of them, this is the sort of code that you get for a trade. So, for example, in soybeans, we're long with a 1 bar stop and $1,600. We've got a sell order. That's where you have your sell order, and you're going to use a trailing stop equal to $533. You can see the Russell, we're short with a 1 bar stop and about $3,000, and it's given a buy order at the number there, 2173.9. This was for yesterday, incidentally, today's trading. If the buyer's elected, you're going to use a $760 trailing stop. So if you're interested in the Success program, do let me know. You're most welcome to subscribe to it. Now, moving on, this is a little bit hard to see, but I'll put my cursor on it. You can see that there's now a line in the Danielcode website that says My Videos. I'll just get the tool for that. It's a bit hard to see. Here's the spotlight. It's right here, right beside this red blob. It says My Videos. And what this is about, folks, is the new Teach Yourself to Trade video system. What you do is you simply decide which one of the videos you want. You let me know. I'll send you an invoice. Pay that invoice, and as soon as that happens, this My Videos link will flash up on your Danielcode homepage. And if you click that, you'll be able to see what number 1, 2, 3, 4. There'll be a number 4 is actually 2 parts, A and B, but it's coded as 4 and 5. There'll be a part 6 coming soon. But that's all new. I want you to be on the lookout for that. If you've asked for any of the Teach Yourself Trading videos, that's where they appear. And you just click on that link. And for those Teach Yourself to Trade, those videos, they are on once and one and done. They're yours. Once you have them, they're yours forever. If you are using the Danielcode Masterclass document, particularly the Masterclass charts, we ask you to be a financial member of the Danielcode, because we have some expense in maintaining those charts. There are charts, they're embedded in Trade Navigator, but we have the obligation of keeping them up to date and maintaining them. But for the teach yourself trading, you pay one fee, you get the videos, they're yours forever. Okay, this is going to be very nice, so let's move past that. Here we are. So this is what you'll get when you get your first video. This tells you that this is lesson 1, and this is finding Daniel's code, creating the time ratios that rule all markets. That's lesson number 1. There's a much longer version of this if you want it, folks. I'll show you where in a moment. This is lesson number 2, creating and trading price signals. And what we do, and it sounds strange, but it's worked marvelously, hasn't it, forever and ever. We take the Danielcode time signals and we convert them to price signals. And time and price are the same thing on different axes. So what we do is we take the actual time signals and we use them as price. And that's what runs all these markets. That's what creates them. And has been doing, I've back tested this stuff back to 1924 from memory. It's been doing that forever and ever and continues doing it. This is lesson 3, Trends and Trading Tricks. This is a course that you really should do before you do the big one, which will be the time trading, creating and trading time signals. And this is this one. This is lesson 4A, learn to create and trade Danielcode time signals. And there are 2 tapes in this lesson. One is the actual teaching of how it works, and the second one, or part 2, actually tells you how to set up your charts, how to create the Danielcode time signals. Even if you're not using Trade Navigator. If you're using Trade Navigator, it's easy because they're built in. If you're using something else, you can create the same charts on almost any platform. They all have much the same. So thinking about this marvelous thing of trading time, which is, folks, really, it's your freedom. I promise you, there's no better feeling in life than having sufficient money that you don't have to worry about it. That you can do for your family and your loved ones what you want to do for them and what they need. And I'm not talking about going nuts over it all. I'm just telling you it's an absolute fact, and there are a lot of people here today, including Mark L. and probably Greg Palladini and others, who've done this course, who've been happy to say publicly, yes, the Danielcode time signals have changed my life. And it can be yours. And the whole purpose we're doing with these Teach Yourself to Trade videos is to make them cheap enough that you can have them. Have a look how this works. There's gold. That happens to be 2 years and 7 months of gold, as much as I could squeeze in there without it going absolutely illegible. And look at those highs and lows. They all look pretty random, don't they? That's the whole point of it. It looks random. According to random walk theory, they are random. And Schiller and his mate got a Nobel Peace Prize for that, so they must be right. Have a look at this a bit further, though. What happens when we put on along the bottom a basic generic time cycle? This is the basic Danielcode 29-day time cycle. And you have to start it at the right place. After that, we don't touch it. It creates its signals itself. And what we're interested in is the points at which either of these colors, red or blue lines, are at their maximum. Their maximum is 100. We're not concerned about the bottom of the chart. We're concerned about where the highs of all those time signals are, because when the time cycle is 100 at its maximum, that's when cycles end. And when time cycles end, we expect a change of trend. And have a look at this. Every high, every important high, every important low has come exactly at a Danielcode time cycle. How far back does this go? As long as you like, and as long as you have the patience to do it. I've never seen it change. Every important turn on every market comes at the expiration of a Danielcode time cycle. And here's part of the proof of it. Now, I'm not saying it finds every single turn. This is quite a slow 29-day. Remember, 360 degrees is 1 day, so you can convert this to degrees whenever you like. Every important high and every important low has come at the expiration of a Danielcode time cycle, and that's 2 years and 7 months. And people, when they see this, when I'm teaching this to them as part of their masterclass course, they say, wow, that's all I need. We've got a couple of blokes who literally said, don't talk to me anymore. That's all I want. It's what I've been looking for all my life. And they actually trade 29-day cycles. I think you can do a lot better than that, as I'll teach you. But that is so surprising. Your jaw should be on the ground. If someone said to you, you can pick and you can forecast every important high and every important low, not only in gold, because they all work exactly the same, you'd be hard-pressed to stick with it, wouldn't you? But it's a fact. That's exactly how markets work. So the Danielcode trading tutorial will make you a super trader. This is the one that I teach. This is one we call Masterclass. I will teach you this. It'll run from, you'll have 7 or 8 sessions with me up to, I don't know, Mr. Where is he gone here? Oh, Gregory Palladini's with us here. Gabe. I think Gabe's up to about lesson number 14 or 15. It doesn't matter. I will work with you as long as you need. Some people get it straight away. Other people take time. Other people have some circumstances that make it hard for them to give to time. But nonetheless, as long as the good Lord's willing for me to be here, I'm available to work with you. And we've got a wonderful quote here from Mark L. I've said it before, I'll say it again. The Danielcode and John Needham have changed my life. Thank you, Mark. I always enjoy reading that so much. And of course, Greg Palladini, who's also with us today, he's a wealth manager in California and a master trader. He was kind enough to say, look, Greg came back to do his second tutorial and learn how to trade time some few years ago now. He said, I'm going to post my experiences on the Danielcode forum. Everything, good and bad. And you should have a look at that. Go to forum at the Danielcode website. Look for Greg's post that says Danielcode trading or Danielcode tutorial, something like that. And you can read all of his comments. And he's been so generous. Some of our clients are incredibly generous, allowing us to share their work with you. Mark L., of course, is one. Greg Palladini, wonderful. And Justin, who's with us today, has done so much research, and talked to you about it in previous webinars. So we're most grateful for that. Okay, so this is an answer that I often give. People say, tell us about your trading. Well, it's not my trading you should be interested in. It's your trading you should be interested in. I know a lot of folks have to talk about their trading because they're virtually saying, look, I'm a good trader, let me prove it to you, then you will follow my trades. We've got a slightly different attitude. My trading is totally irrelevant. What's important is our clients' trading. In other words, if I can have my clients, and as I say, they've been kind enough, some of them, to say, yes, I'll be happy for you to interview me. I'll talk about my trading during the tutorial. I'll talk about what I've learned. What you can see is that when the clients get it, when they're making the money, that's success. Not my trading, your trading. That's the important part. And there are 4 links here. You won't have time to copy these down, so don't bother. They're on the website, on the home page. And they're 4 interviews. The first one's with Mark L. The next one is with Amy, and I've forgotten the husband's name. Nice guy. And of course, Justin, who's with us today from the Hunter Valley. He has done the interviews 3 and 4. It's absolutely amazing stuff. Jerry Winter, if you haven't done this before, go through these. I know they're probably 20, 25 minutes, most of them, but honestly, it'll change your life. Change your life. And that's what they all say. So this is masterclass. This is very basic. This is very simple. This is very factual. I'm trying to get through to you the potential gift that's sitting there waiting for you. I am having great trouble getting it through to you, or either that or it's been too expensive, which is why we've brought out this totally new program of simply offering you the teaching through the videos. Have a look how good this is. This is masterclass. This is what you learn with the full Danielcode tutorial, and you can now learn almost exactly the same thing from the video. And in fact, it's video number 4. But I do suggest that you want to do one or more before you get to that. But here we are. This is the Russell. Very good trading market. I've been saying for years this is the best of the equities to trade. But have a look. You see the little thin blue lines on a swing high there. It's an outside bar. And it then creates a Danielcode time signal from there. There's a 44. Remember, time signals are valid for plus or minus 1 period. And that's because almost a third of bars, 27.9% of bars, nearly 30% of bars, are not on the charts. They're weekends and government federal holidays. So almost a third of the bars are not on these charts. And that's why we say that time signals are valid for plus or minus 1 period, because they've got that built-in synthetic time error that some of the days are not there. But straight ahead, you can see how well it does. It's given us a 45 cycle there, which was 1 day past the low. The 59 cycle, 1 day past the low. And the 62 cycle, which is the alternate of the 59, it's right on that low bar. And that's where we start our time cycle from. And what you're looking at here, this is a piece of trading that I've done this week with what's my friend's name? Hamad, I'm sorry. He's a very proud English gentleman, and at the moment I can tell you he's on holidays in Gibraltar, which if you've never been to Gibraltar, it's the most wonderful, wonderful place. It really is. And this is a piece of trading I went through with him. And you can see that these buy and sell signals, which are not on this chart, but they're created simply in a machine manner by the time cycles. You can see how extraordinary this piece of trading is. Well, is this an extraordinary piece of chart? Yeah, this is a good chart. This is the sort of chart we want to be trading. It's got good up movement and down movement and up movement and down movement. And the great joy of futures is we get paid exactly the same when the market's going down as we get when the market's going up, with the caveat that down moves tend to be faster. The old saying, the market goes up by the stairs and down by the escalator. Well, we haven't seen a decent down market for quite some time, but it may be coming very soon, which reminds me, folks, if you're not getting Frank DB's fourth seal commentary, at least on the S&P and gold, you really, really should. If you're not getting it, you're missing out on a great deal. Frank is proving every day that he is probably the best time analyst in the world. Certainly the only one who at the time, hindsight's a wonderful thing, I'm talking about at the time, on the day and in the weeks afterwards, Frank was saying 2022 January, that's not the high. It can't be a high because it hasn't come on the Danielcode time cycles that will identify a high. The market is going to correct and it's going to go on making higher highs, which is exactly what it's been doing recently. And I can't find any other analyst who is prepared to put that in writing as Frank did. And he's been spot on. And his commentary comes out every week on Monday, sometimes Tuesday. So have a look what happens here. All of these trades, buys and sells, are all coming on appropriate time signals. And what have we got down the bottom? What's this little ATR all about? Well, that's the average true range calculation. And what we do is we take a 29-day average true range. I don't like the default, which is 7 days, much too short in my opinion, because if you're buying the high and stop at the low, or vice versa, a one-day bar is really your risk on entry. And if you take that and make an average over the last 29 days, you get a much fairer valuation for what the ATR is. And when we're taking trades against the apparent trend, we're using what we call our discretionary trailing stop, which is a trailing stop based on the ATR. Have a look at this. As I say, is this a particularly good piece of chart? No. It's a very good piece of chart. This is exactly the chart you want to be trading because it's going up and down and up and down and up and down. That's great. The more it moves, the more money we make. Wait till you see what this really means. Here we are. This is where it started from, the 62 cycle. These things don't just appear by random. Look where the high came, exactly on a 44 cycle. Where did the low come? The last 59, where I stopped trading this particular piece of chart. Didn't have to stop there, it just goes on and on, but I was doing this with a client, and this was a time was up, but I happened to stop exactly at the 59-day cycle, which starts the new rotation. So you can see that this is not happenstance, any of this. This is all happening in a very obvious and controlled environment if you understand time, which is what I teach you. Have a look what this comes up to be at the end of the day. This is about 80 days of trading, 2 months and 18 days. There's 14 trades, 9 of them are winners, 5 of them are losers. There's one small loser that for some reason or other is not on this chart. It's washed off for some reason. It was about a few $100s. The total of the wins, 22,400. The total of the losers, less than $2,000. Your gross is about 20,000 in 80 days. Okay, you're not going to get that. You've got slippage, you've got all sorts of other issues to deal with. But calculate that 80 days is roughly a third of a year, 244 on trading days in a year. 80 is close enough to a third for our purposes. Multiply that by 3. Express it as a percentage of margin, which, as I recall, is around $7,000. And you're into some of that territory that Mark L. And Justin have talked about getting in their paper trading. Is there bad pieces on this chart? Yes, there are. There are parts where this market consolidates. All markets have periods where they go into a period of consolidation. But I will give you the tools so you can identify when the market is going into a consolidation. I can't tell you that you'll get that in advance. You'll probably have 2 losing trades before the tool starts screaming at you. Stand aside. This is a consolidation. And that's basically what it does. Quite extraordinary. Will you get the same trading results? I guarantee you will. If you trade the same chart with the same Danielcode rules, you must get the same results. And Danielcode is a rules-based system. Once you understand the rules, this is what you'll get. When the market is sleepy, it's not active, don't trade that market. Trade a different market. There'll always be markets that are active. They've got this nice pattern, up and down and up and down. Or down and down and down and down. It's just as good. It doesn't matter as long as we have horizontal movement. And you can assess that really simply with your eyeball. And however many markets you decide to trade, and I suggest you 3 is probably the optimum number, non-correlated markets, you should be looking at the next 3 markets on the weekend when you're doing your review, updating your chart, recalculating your ATR. That should be recalculated. I used to do it every day when I was really keen on this trading, which I still am, but I don't do it every day. If you did it every 7 days, you'd be on the side of the angels. I do it much more slowly than that, but the more you do it, the easier it becomes. Put it on a spreadsheet. There's the formula. What you're basically doing is you're taking the number that the tool gives you. There's a tool there that's called average true range. You'll just read it off the tool. This one happened to say whatever Dow was on, 31.85. That's in points and decimals. So that's 31.85 multiply it by 10 because in this market there are 10 ticks to a point, and then multiply it by 5 because each tick is worth $5, and you get the gross value in dollars of the average true range, which was almost $1,600. And for your discretionary trailing stop, if you're taking a trade against the apparent trend, we suggest that you use a 50 or a 59% of the ATR. And as you can see, it certainly keeps those losses under control in a major way. So this banner will be up very shortly, maybe even later today. Terry's probably working on it as we speak, and when you click on that, that will give you the details of all of the various courses that we offer and the teachings. I thought I would tease you a little bit with this chart. This is pound futures contract on Beyond Masterclass. And one of the interesting things it's doing, where it's got the little black diamond and the word valid, that's a place where there was zero balance momentum. Same context as set zero balance on price or time, which you may have heard about, but this is zero balance momentum. And it's kind of interesting, isn't it? Because that's where all the big moves come in. In other words, that's where the institutions are trading. And you can see that by being aware of these points where the institutions are trading, you can get a very good appreciation of where the bigger moves come from. And interestingly, on this market, there's no zero balance at the recent high 5, 6, 7, 8 days ago. So that suggests that the institutions are riding out this little pullback, and it may well go higher. Interesting stuff. Beyond Masterclass. For those of you who've already done a full Danielcode tutorial, you'll be able to do the Masterclass Beyond Masterclass course, and we'll credit you for whatever you paid to do your full tutorial. Well, that's about me for today, folks. A little bit shorter one today. Doesn't make it less important. I think there's some stunningly important ideas there about trading time. You can now learn it from the video session, Teach Yourself Trading. The whole package for trading time is $249. We've tried to bring it down as much as possible. It's never been available before for less than $6,000, $6,500 ever. So you can access it now for about a third of what it's been available for in the past. And I do suggest, remember, this is a special introductory offer. Those prices are not going to stay that way forever. But I hope I've made them attractive to you. Your job is to jump on them, have a look which ones interest you. Email me, jneedham@daunting.com, and we'll take it from there. In the meantime, if you haven't already, please take a free trial of Danielcode. We will, if you've had a previous trial, incidentally, the machine will remember you and won't want to give you another free trial. As long as that was some time ago, email Terry at support@daunting.com, and we're quite happy if you'd have another trial because so much new stuff has happened in the period. And finally, folks, this is my disclaimer to you. I do suggest you take it seriously. It's very easy to lose all your money trading futures or Forex if you don't know what you're doing. The good news is it's also very easy to make a lot of money once you do know how to trade. So enjoy your weekend. Thank you for being with me today. Any questions, please email me, jneedham@daunting.com, and I'll look forward to seeing you at our next webinar. Bye-bye for now.